have an order to sell below this bear bar. Very, very tight channel up, but 3 pushes here, 1, 2, 3. Bigger bar here, pull back, and then small second leg. So I thought it's a reasonable swing sell for potential test of the bottom of the biclimax here. Signal bar is small, so risk is small, so I know that it's probably not going to work out, but I think if we can get a swing down to the low of the climax here, I think the reward makes up for the lack of probability. And because it's a low probability trade, I took small size. I just traded 20 shares, risking about 25 cents, I think. So about $5. I decided to just get out of that break even. I thought about it a little bit more and realized that we could get 3 pushes from this bar. So it could be 1, 2, 3. And also, it's a 10 bar bull micro channel. And also, I don't want to start my day off with a low probability entry like this. Even though it might work, I'd rather wait for 3 or 4 bear bars first and then sell. I don't think I want to take a low probability entry as my first trade. All right, so we went above that high for a third push up. That would have stopped me out, so I'm glad I exited there. Now we have a micro double top and a second entry sell. So this one I will take. It's still low probability because it's against the trend, obviously, but it's higher probability than the last one. So I'm okay to take this one as my first trade. Okay, just close that one out as well. I don't know. I'm like 2 minutes after I enter every trade, I'm just finding reasons to exit. Not because I think the market is not doing what I think it should do, but I'm just wondering why I'm in these trades. Just second guessing myself and wondering if I'm taking these trades because I haven't taken a trade all day and because I want to do something. But I think it's reasonable to sell this first swing down to the bottom of the biclimax here. But there are much better trade opportunities. I could wait for the pullback and then buy a pullback, which would be buying low in a bull trend, which is good. So I don't know why I'm forcing these ones, even though they are set up for a swing down. I keep thinking that I'm just trying to take something for the sake of taking something. So I'm just gonna stay out for now and wait to buy in the direction of the trend, not sell against it. So I'm about break even, up 80 cents from both of these, but they're just break even trades. So I'll see if I can find something else. So I would have been stopped out here again. So really, really fortunate to have gotten out here. And this is just like, I've noticed this more often as I've tried to reflect more on how I'm feeling during a trade. And I'm realizing that this is exactly how your mind plays tricks on you. Is that all of these I can make a case for. In the moment I can make a case for it and say, hey, it's reasonable for a swing sell. And because it's reasonable, somehow your mind shifts to only finding reasons to take the trade. But because in the trade I'm now thinking, wait, is this okay? It might be reasonable. There might be some expectancy to it if I take it 100 times and I wait for a swing and a reversal. Maybe there is something to it. But why am I taking it? Why do I have to take that trade? And I often take these when I haven't taken a trade for a couple hours. And so me itching to trade makes my mind focus on only the positive aspects of a setup, like these two, instead of thinking, if I just wait for the pullback, then I can get a better probability trade. Or if I get stopped out of this, I'm really going to regret it. Because it's clear at the end of the day when you look at this chart that why are you selling in a very strong bull trend? It doesn't make much sense. But in the moment, it makes perfect sense because all I'm thinking about is where can I get my next trade? because I haven't taken a trade yet. And I can find a reasonable, rational reason to take this. And I feel like I'm catching myself more in those moments. Clearly, in these two situations, I would have been stopped out twice. But I'm entering the trade and then realizing that I'm being fooled by myself. And I'm lucky that it happened right before getting stopped out. But I think as I get better, I need to notice it before entering, because either of these could have stopped me out. And even though it would be a small loss, it would still be a $6 or $7 or $8 loser, which will affect my future trades for the day, because I'll be on tilt a little bit. So I've been noticing these tricks that my mind is playing more often recently, but I definitely have to get ahead of it and not take these in the first place, unless there's a really, really good reason to take it. I have an order to buy above this bull bar. 6 consecutive bull bars, so building some buying pressure. Double bottom bull flag, 3 attempts down, but couldn't get a test down. And instead got a buy signal here, and then 3 decent bull bars. They're still small relative to the bars from earlier in the day, but I think we're building buying pressure, so I think it's a reasonable buy. I'd much rather get stopped out of a trade like this than get stopped out here, so I'm okay with this trade. See if we get a swing up. We just got filled there. I'm gonna put my stop below the double bottom bull flag. Only traded 10 shares, risking about $6. The only concern I have to the downside is that we haven't touched the moving average, which is about at 338.30. We haven't touched the moving average in about 40 bars. So when it approaches 1 o'clock, the odds start to increase that we're going to get down there. So I don't know how much upside is left, but because we're building buying pressure, I thought it was worth it. And because the moving average is above my stop loss, so it's above the bottom of the double bottom bull flag. So even if we do have to come down and test it, just with a bar or two, we'd still be above my stop. So if we pull back slightly here, there's still a chance we continue higher. Decided to exit there. Try to zoom in a bit. So I bought above here. We went down this bar, up on this bar, and then down here again, and got a bear bar closing on its low. So I just exited below it. It still looks kind of like a small pullback bull trend, but micro double top and a bear bar closing near its low. So I just exited. It wasn't doing what I thought it would. I thought it would continue the buying pressure and then eventually get a breakout, but we didn't get that. Instead, we just went sideways. After the 4 bull bars, I bought at the high of the bad buy signal, thinking that 4 bull bars, in this context, 2 legs down, the 4 bull bars were enough to create a second leg up, or at least sideways here. And looking for 10 cents on it. Here it got filled. Essentially, my premise was that we have 2 legs down, 3 pushes on the second leg, so I think the 4 bull bar breakout was enough to end this parabolic wedge second leg down. So 1 pullback 2, and in the second leg we have a parabolic wedge, and then we have the 4 bull bar breakout. So I thought that ended this structure, and then we had a bad buy signal. So I thought we'd come down and test the bad buy signal, and we also have a bad sell signal up here after 4 bull bars. So I thought we'd come down and test the bad buy signal, and then get back up above the low of this bad sell signal. I hope that makes sense. So I thought we'd get a second leg up from these 4 bull bars. So I thought we'd get a second leg up or sideways before breaking below this low. So I thought it was safe to buy anywhere down here, but I thought we'd test the high of the bad buy signal. So I thought we'd test down here. So I wanted to buy at this area, knowing that it was likely, in my opinion, that we'd get back up above this low, which we did do. So even if we didn't get there on this bar, I thought we might get a second leg down and get back up there. I also think that this bar is buy to close, but I didn't take it, obviously. I bought 25 shares and scalped that with 10 cents, so 250. So up $1 now.